6th of August 2020. Let's give you a lineup of what we'll be discussing this morning. We'll review a market performance for previous day. We'll look at July 2020 Nigeria Capital Market Service reports. Some capital market updates will also come through, and we'll have corporate results coming in this period of second quarter 2020 and insights into gold price surging. Board appointments will also be part of what we'll be looking at in this program. Let's begin with previous day market performance. Investors gained 20.92 billion naira as NSE ASI inched up further by 0.16% to maintain a positive posture. Equities markets closed on the positive posture by appreciating plus 0.16% to close at 24,882.04 basis points, as against plus 0.31% appreciation recorded previously. Its year-to-date returns currently stands at minus 7.30%. In terms of market breadth, it closed positive as CAP led gainers, 18 gainers, as against 12 losers topped by Itana. At the end of yesterday's session, it showed an unimproved performance when compared with previous outlook. For market turnover, it closed positive as volumes moved up by plus 148.14% as against minus 17.17% downtick recorded in the previous session. United Africa Company of Nigeria, FBN Holdings and Access Bank were the most active to boost market turnover. Presco and Zenith Bank topped the market value list. Presco also led the list of active stocks that recorded impressive volume spike at the end of yesterday's session. Let's look at some reports on the capital markets and the Nigerian stock market from the Pro-Shares table of its Capital Market Service reports. July shows that it's closed positive as market witnessed renewed bargain hunting during the month under review. The Nigeria Stock Exchange All-Share Index inched up by plus 0.88% as against 3.12% loss recorded in the month of June 2020, while the NASD Unlisted Shares Index, USI, closed southwards with minus 2.05% loss recorded at the end of the month under review as against plus 3.48% gain in June 2020. Year to date, the NSE ASI has dipped by minus 8.0%, while the NSE USI inched up by plus 0.47% so far in the year. On market development, regulation and investors protection, the Securities Exchange Commission's new management, which stated that it will continue to implement the 10-year master plan, has continued to generate a lot of discussions and focus in terms of a strategy. The new management, which resumed duty on Monday, July 6th, 2020, alongside executive commissioners, briefed market stakeholders and reassured the market of value for investor protection and market surveillance. Also, the Nigeria Stock Exchange announced the effective date of its rules on release calendar for regulatory announcement and filings of listed companies and entities, and also looked at the proposed new rules on outsourcing of functions and shared services and fintech partnerships and collaborations. It also sent invitations for comments, which already the time has elapsed. From the analysis of the market capitalization of various exchanges, Pro-Share Research highlighted the following. FMDQ continues to maintain the lead in the debt market with 28.98 trillion naira and is now closely followed by the Nigeria Stock Exchange with 28.58 trillion naira. The NASD unlisted market is third with 514.8 billion naira in terms of capitalization. Let's go on to capital market updates and further analysis of the total transactions executed between the current and prior month, May and June, revealed that total domestic transactions decreased by 13.55% from 83.91 billion naira in May to 72.54 billion naira in June 2020. However, total foreign transactions increased by 59.88% from 35.24 billion naira, which is about $90.89 million, to 56.34 billion naira, which is about $145.68 million between May and June 2020. Institutional investors outperformed retail investors by 10%. a comparison of domestic transactions in the current and prior months, that's May 2020, revealed that retail transactions decreased by 23.35% from 42.19 billion naira in May 2020 to 32.34 billion naira in June 2020. Whilst the institutional composition of the domestic market also decreased by 3.64% from 41.72 billion naira in May 2020 to 40.20 billion naira in June 2020. The data also highlighted the performance of the market over the last decade over a 13-year period, which shows that domestic transactions decreased by 72.30% from 3.556 trillion naira in 2007 to 985 billion naira in 2019, whilst foreign transactions increased by 53.08% from 616 billion naira to 943 billion naira over the same period. Total domestic transactions accounted for about 51% of the total transactions carried out in 2019, whilst foreign transactions accounted for about 49% of the total transactions in the same period. The actual performance reference 2020 actual showed that total foreign transactions carried out till year to date is about 396.63 billion naira, whilst total domestic transactions year to date is about 606.91 billion naira. That's the capital market updates in terms of activities happening between institutional, retail, and other key investors in the market. From Custodian Insurance brings this development around appointments. Following the approval of the retirement of Dr. Tony Ogumbo, who turned 70 years, from the Board of Directors of Custodian Investment PLC, at the board meeting held on 29 July 2020, the board also approved the appointment of Mrs. Mimi Ade Odiachi as an independent director on the company's board of directors. Mrs. Mimi Ade Odiachi is a seasoned professional and entrepreneur with over 3 decades experience in non-bank financial services, which covers insurance. She has also covered hospitality management and landscape architecture and holds a bachelor's degree in insurance from the University of Lagos. She's also a chartered insurer. She's an executive director at Whispering Palms Hotels and Resort. She's also a founder and chief executive officer of Omar Gardens Floral Company. She's also currently serving as the chairman of Custodian Social Responsibility Foundation. Airtel Networks Kenya and Airtel Africa PLC subsidiary and Telcom Kenya Limited, amongst other parties, have entered into an agreement dated 8 February 2019 to combine their businesses in Kenya so as to create an integrated telecommunications platform with mobile enterprise and wholesale divisions. The completion of transaction was subject to satisfaction of various conditions precedent, including regulatory approvals. Despite Airtel Africa PLC and Telcom respective endeavors to reach a successful closure, the transaction has gone through a very lengthy process which had led the parties to reconsider their stance. Accordingly, Airtel Africa PLC and Telcom have decided to no longer pursue completion of the transaction. Mr. Raghunath Mandava, the Airtel Africa CEO and MD, on this transaction said, "Kenya is a large and growing market and we remain committed to build a growing, profitable business. We currently serve more than 14 million Kenyan customers, a number that is growing month on month, and in the last quarter, our revenue numbers were up double-digit in constant currency in Kenya." According to him, the strategy was to focus on winning more customers, invest in a best-in-class voice and data network, and progressively expand the mobile money business, which will continue to build on the results in order to deliver against opportunities the Kenyan market has to offer. Let's get on to some results that are coming into the program. Berger Pence, one of the listed companies in Nigeria Stock Exchange, released the second quarter 2020 unaudited results for the period ended June 30, 2020. And here are the key highlights. Revenue grew by plus 16.7% to 1.82 billion naira from 1.56 billion naira in the previous quarter. Profit before tax declined by 71.8% to 60.43 million naira. Profit after tax declined by 71.8% to 41.09 million naira. Net assets declined by 1% from 3.07 billion naira to 3.04 billion naira. Let's go to Ikeja Hotel PLC, which released its second quarter 2020 unaudited results for the period ended June 30, 2020. Here are the key highlights from Ikeja Hotel PLC. Revenue declined by 49.97% to 2.90 billion naira from 5.80 billion naira in the previous quarter. Profit before tax declined by 122.54% to 77.05 million naira. Profit after tax declined by 376.22% to 785.90 million naira. Net assets declined by 4.1% from 19.37 billion naira to 18.58 billion naira. There's some interesting stories at the global commodities market which we'd like to bring to you, and it's around gold. It said that gold prices have closed at a record high of $2,019 per cent. This is one interesting story that has come on since Tuesday, 4th of August, for the first time since September 2011. It showed that spot gold prices have appreciated by more than plus 33% so far in 2020 setting, and it's on course of having its strongest price appreciation in 40 years. Analysts note that this has been an increase in investor preference for metals such as gold, silver, palladium, and platinum. The uptick in metal prices reflects investors' strategic holding of alternative assets to hedge downturns in value of currencies previously considered to be safe havens of value. The COVID-19 pandemic and the tumbling returns on equities have fixed income assets nudged investors to reconsider their options, and the major beneficiaries of the new investor outlook appear to be gold and other metals. Investors fleeing to gold believe it will provide the necessary stability to their portfolios and insulate their assets from coronavirus-induced global market uncertainty. Some investors have opted for silver in the hope that when a global economic recovery, possibly in 2021, is triggered, an increase in factory activity would propel an increase in demand for silver used in industrial factories. The fall in American 10-year bond bill yields, which is currently at a record low, has led to the shift of focus to other asset classes. Given the paucity and limitations of asset classes for investment, investors are tilting towards metals such as gold and silver with what appears to be higher returns and stability. Accommodative monetary policy coupled with increased government spending has weakened the dollar against other currencies, thereby strengthening the demand for gold. The fall in the value of the dollars has made gold relatively cheaper in other currencies, which has fueled the increase in gold demand. The year-to-date value of gold increased by plus 33.08%, while recorded a week-to-date increase of plus 3.10%. Investors are increasingly taking different asset positions based on their forecast of the global economic outlook. It is uncertain that upward R in metal prices will continue as global capital markets are still edgy. If the U.S. Treasury bill yield continues to decline and the value of the dollar weakens relative to other currencies, like the price of gold, will definitely continue to rise. On the other hand, if the dollar strengthens gradually, consumer and investor confidence in the American economy will be restored, and the gold market may likely see a trend reversal. Consequently, if the prospective second wave of coronavirus hits and there is a decline in global factory production, there will be an increase in the demand and price of precious metals like gold, silver, palladium, and platinum. However, it says if a vaccine for the virus is found and factories resume activities at a fast pace, then investors will expect a significant rise in the demand and price of silver. And this is coming at a time that Nigeria recently launched the Presidential Artisanal Gold Mining Initiative, PAGMI. And so this is a great opportunity for Nigeria to latch onto this and really leverage the opportunities that come from diversifying its economic revenue base from dependency on crude oil. This shows great prospects for Nigeria in this period, as we know that gold is now becoming a safe haven for investors. So if we can leverage through PAGMI and deepen activities in gold mining to commercial value, it will create jobs, it will deepen our revenue diversification prospects, and it will also deepen economic activities in gold mining zones like Osun State, Zamfara State, amongst other states in the country that have gold reserves. And this also further brings to the fore the need for Nigeria to strengthen its mineral resource base in terms of utilization, in terms of navigating it and presenting it for commercial value. Over the decades, Nigeria has had a very robust strategy and plan to deepen its solid mineral base, but policy inaction and inconsistency has affected it. With PAGMI, initiatives like PAGMI, we hope to see activities scale in gold, and that should now translate to other major minerals that Nigeria will be looking for commercial value utilization, like limestone, like bitumen. Bitumen, as we all know, is now going to be considered for road construction and other aspects of production. And so this is very important for the Federal Ministry of Mines, Power and Steel to once again review its policy and ensure that these plans work. Initially, I said mines, power and steel. It's mines and steel. I was saying. Now, diversification of revenue has become a core approach of this administration. But beyond the diversification of revenue, we also expect that the capital market will become a platform to assess, to deepen the activities. And so we look at mineral or gold mining companies, or companies that are operating in this space, deepening the activities and coming to the market to also ensure that there's transparency and accountability. And with the activities of the National Extractive Industry Transparency Initiative, NETI, we hope to see more transparency and disclosures in terms of activities in that space and how they can be tapped to contribute to revenue and economic growth. Also, states across the country will need to begin to control their reserves in terms of mineral resources. We need to revisit our fiscal structure and framework to enable it drive revenue for states. Currently, the fiscal structure doesn't allow states, particularly because of the exclusive list, to harness their resources, particularly mineral resources. So we expect that there can be a fiscal restructuring in a way that states can also take ownership of mineral resources. So for example, if Zamfara State can leverage on its gold reserves, carry out mining, and there's mining rights, they should also benefit immensely in terms of the revenue that comes from gold mining activities, whether it is now at the large scale. And that will also open up revenue opportunities for Zamfara State, which will not need to tie to the federal account allocation FAC for subventions. They can generate revenue on their own and also support economic activities in that regard. Also in this period, projects like the Jakarta Steel Complex, if ramped up and everything is sorted out, would help to also deepen steel production and scale opportunities for Nigeria to also export and earn revenue. In a nutshell, this is an opportunity for Nigeria to leverage its solid mineral space. We're seeing what's happening in the oil and gas market. There's a huge volatility. Major oil companies are posting losses, and this should be of immense concern to Nigeria. And so already we note the steps taken by the federal government in terms of repositioning the solid mineral space. And we also hear the plan by 2025 to achieve over 3% contribution to GDP. We believe that with focus, with discipline, with reforms, and with consistency in terms of policy trajectory, that can be achieved for the country. We also note that stakeholders will have to continue to embrace transparency and create enabling environments for the activities in solid minerals to thrive. And this means that all the states that have minerals of commercial value will have to review their operations and work in partnership with the federal government to ensure that there's an ease of access in terms of operations there. We also call on the federal government to really take seriously the opportunities for fiscal restructuring. National Assembly plays a key role here. We've drummed it. It's time that we take that step because states cannot afford to continue to depend on federal account allocation. And this is the low-hanging fruit. If we can restructure to remove that exclusive list where has the concern or the provision for only the federal government to provide licensing for mining and control the revenue, that could be a big opportunity for states. And we hope that this will be considered in subsequent engagements between the executive and the National Assembly. And speaking about this, the CAMA bill, the Company Allied Matters Act bill, is one area of concern which we need to continue the advocacy. The Institute of Directors of Nigeria and other stakeholders are continuing to re-emphasize the need for that bill to be given assent by the President, and that would be a game changer for Nigeria's business environment and in relation to our markets. And so we hope that that bill will be given assent in due time because it's very important at this time for the economy to have a very, very investor-friendly business environment. Also, we want to once again reiterate our expectation from the Securities and Exchange Commission, now led by Alhaji Lamido Yuguda, who is the Director General, that the long-awaited Capital Market Committee meeting is long overdue and it has to hold, so to give a direction for the capital market and developments in terms of how this pandemic has impacted the capital market ecosystem and various steps that will be taken in implementing policies, particularly the 10-year capital market master plan and other initiatives that will boost investor confidence, ensure investor protection, and also give a direction for investors in terms of how they can continue to engage the markets. We've seen innovations, we've seen activities from Nigeria Stock Exchange, from the FMDQ Securities Exchange and the NSD, but of course we need more clarity of direction from the SEC Nigeria, the apex regulatory agency for the capital markets in terms of how the capital market should go in terms of direction and policy. And speaking to issues of global policy and regulatory steps, the SEC US had issued its Small Business Administration Council direction, which is something that various other securities commission can learn from, how Securities and Exchange Commissions can continue to improve the opportunities for small businesses to thrive and also assess governance that will help them access more capital. And so we expect that the Securities and Exchange Commission of Nigeria will learn from that and also engage all the exchanges to see how more growth potential companies can continue to thrive with governance policies that promote their interests. And that speaks to the initiatives like the Growth Board of the Nigeria Stock Exchange and other opportunities that the NASD is providing to the enterprise, NASD Enterprise portal. And we hope that the SEC Nigeria can also leverage on this to improve the environment for growth companies, for small businesses to also thrive and also assess the market to grow and achieve scale because of that. And also of huge interest to me also is the tech space. We have NASDAQ in the US that has opportunities for tech companies to scale and thrive. And so also the Growth Board initiative of the NSC is good, but we also need to provide that avenue for tech companies who have the potential to unlock activities in the economy to also come on board to the markets. When you look at the American market, the NASDAQ, you see companies like Apple, Facebook, Google, and Amazon driving market capitalization to $1 trillion heights. That can be achieved in Nigeria as we continue to see more roadmaps and strategies to encourage tech companies to come on board in the capital markets. We also note the Securities and Exchange Commission roadmap for fintech companies, which was inaugurated during the tenure of Acting Director General of SEC Nigeria, Ms. Mary Uduk. We also hope that Ms. Alhaji Lamido Yuguda will strengthen that process and we'll begin to see more activities in terms of fintech leveraging the capital market, because in terms of investments, the fintech companies continue to be the major source of investment attraction in terms of value and potential activities. Over $300 million came in last year to the fintech space in Nigeria. This year, we know that COVID has impacted investment prospects, but that space still remains a veritable asset for more investment into Nigeria. We believe that this period, SEC Nigeria will also explore how it can improve that environment and leverage on the sandbox and the roadmap to improve access for the market. Also, we'll continue to monitor the new guidelines issued by the Central Bank of Nigeria, like the Global Standing Principle, the GSI, that affects banks in terms of debtors, recalcitrant debtors, debtors that refuse to cooperate to clear their debts and loans. This will be an issue that we'll continue to monitor as it affects banks, and that banks are also key in the market. Banks' exposures, particularly banks that have exposures in the oil and gas sector and other critical sectors, this could really affect their activities. So how the GSI, in terms of its implementation, will affect the banks and including the microfinance banks will be part of those issues we will look at and discuss in our program. And there's a lot of expectation, and we hope that regulatory activities will help to spur our market activities, but most particularly restore retail investor confidence. And that'll be all for the market review today. You can join us tomorrow for our last edition for the week, same time, 10 a.m. for reports, analysis, and exclusive interviews on Nigerian capital markets. Also log on to the website www.prochanger.com to watch our videos, read our news reports, and stories. It's a special message to all investors and the public. Please beware of online platforms that promise you 100 to 200% returns, and they are not registered with the Securities and Exchange Commission or regulated by SEC. Do not give in your schemes and strategies or investments, hard-earned savings to these schemes, because they are out to rip you of your hard-earned money. And this period of COVID and uncertainty, you don't want to waste your money on things that you cannot vouch for. So please take caution and also reach out to our platform. You can send your feedback, comments, or inquiries around investment decisions to research@prochanger.com, and we will give you responses around those investments so you can make the wise and good decision. That'll be all for this edition. Thank you for watching. Have a nice day and please stay safe.